Actually started off my career as a real estate lawyer in the UK, but I found myself moving over to São Paulo in Brazil, and I worked with inbound and outbound investment. As part of that, I touched upon energy, and that really gave me a flavour for the sector. And when I moved to Australia, I just got the timing right. I had a big, large-scale funding round for solar here. And for me, it was just a logical progression over time.
You've worked across Asia Pacific, Latin America, Africa, and Europe. So how does Australia compare in terms of ambition and execution?
Australia is an extremely sophisticated market. There's no doubt about that. And if you also look at it from a perspective of its natural resources, critical minerals, land, sunshine, wind, it's got every composition you need to be a global power in the energy space. That said, I think the challenge that investors find in Australia is that it's really around that policy component. It's moving too quick, changing politically or views. We've seen that in certain states in Australia, which have now changed their roadmaps. And also it's around that grid curtailment connection issue. You've got all these projects that want to connect to national grid and cannot.
For young lawyers who want to work in the energy and infrastructure space, what skills or mindset do they need to develop early?
Yeah, look, from personal perspective, I think it's about having a passion, genuinely a passion for the area. If you've got the passion and you're curious and willing to put the time in and really get to understand the sector, then you're going to be a great project financer.
Where you sit, is the energy transition inevitable, or are there still major structural obstacles?
It's a great question. It's the $1 million question.
Okay, Jamie, welcome to the podcast.
Thank you for having me.
So not only is Jamie a fantastic lawyer, he's also one of the good guys. So I'm really excited to speak to him today, get to know more of an understanding of his career, his journey, and a bit more about the renewable sector. Welcome, Jamie.
Thank you. Good to be here.
So, Jamie, you're now recognized as a market-leading project finance lawyer, but how did you first find your way into energy and infrastructure, and was it intentional or did it evolve?
It's a good question. It certainly wasn't the master plan. I actually started off my career as a real estate lawyer in the UK, but I found myself moving over to São Paulo in Brazil, and there I worked with inbound and outbound investment. As part of that, I touched upon energy, and that really gave me a flavour for the sector. And when I moved to Australia, I just got the timing right. I had a big, large-scale funding round for solar here. And for me, it was just a logical progression over time. I just fell into the area.
Awesome. And at what point did you realize renewables wasn't just a niche sector, but it's something that would genuinely reshape the global economy?
Yeah, I think it's you got to follow the capital, particularly when you're doing finance. And I think to start with, these type of projects which are on the fringe, and you didn't have mainstream lenders lending into these projects, or just one and two, but it was a point of which just capital started flowing in, and every single institutional financier wanted to be involved in these projects. And now if you look where we got to on evolution, we've now got to the juncture where institutional capital is coming in. So the likes of BlackRock and Brookfield have spent billions of dollars buying up assets in Australia. I think that was a sign that the sector itself had reached maturity.
Yeah, it's awesome. I think it's also a really good lesson for, lawyers in their career, looking at not just where you have a passion, but also what's going to be the future, the next 10 to 20 years.
Exactly. What your idea of what you as a lawyer are today is going to be very different in 10 years time, 5 years time, even next year, frankly. So you need to be nimble and fluid with your practice.
Awesome. And so for listeners who aren't lawyers, what does a project finance lawyer actually do on large scale renewable projects?
Yeah, good question again. I think in simple terms, it's about taking a conceptual design of a project, and then being in the middle and pulling all the strings, putting documentation together so that it actually gets to an end product. And what that really means is that you're looking at the documents, whether you're sponsor side or your lender side, and looking at to ensure there's appropriate risk allocation between the parties, and then ensuring that under stress, the project can withstand that stress.
Awesome. Sounds like a complex job. So, and then what's the difference between financing a traditional infrastructure project and financing a wind, solar, or battery project today, in your opinion?
Yeah, look, when I think about traditional infrastructure, and you hear different concepts now, you hear core plus, there's lots of terminology chucked around there. But when I think about traditional infrastructure, I think of roads, rail, PPPs essentially. And then if you were to do a comparative between renewables and core infrastructure, there's a lot of synergies there in terms of structure and how they're financed, but there's also quite a few material differences. For example, renewables brings in various variances such as offtake agreements, your revenue stream, grid connection agreements, and the big regulatory framework that sits behind it. And compared to a number of sectors, that's probably one of the key differences. Energy is so fluid; it's changing seemingly every single week, frankly. And lenders and sponsors are all having to adapt and move quickly to ensure that their project, one, they're bringing to financial close remains commercially viable, but two, those people are already banked a project or even operating a project to ensure that suddenly the economics are not undermined. So it's quite a complex sector.
Yeah, absolutely. I'm just even looking from the sidelines, it's moving so fast. Even we get a briefing from a client and what they're looking for, it could be different one week to the next.
Yeah.
But that's awesome. It's good to be a part of.
Absolutely.
So, and then when you walk into a deal, what are the first three risks you're thinking about?
So, I mean, touched on it just now, but so the first conversation even the lender will have with a sponsor is they go, look, I've got this fantastic project. It's this size, it's in this location. And the lender go, that sounds great, but what does your revenue stream look like? So project finance 101 is about cash flow, because lenders are focused on, and equity, of course, as well, but ensure that they're going to get paid back or they're going to get profit from the project, right? So the first thing is revenue offtake to ensure actually there is a clear, steady cash flow. The second will be around what your procurement strategy is. So how it is actually going to be built. So EPC or D&C contracts, the construction contracts, what do they look like? Is it an EPC wrap? Is it split contracting structure? How's that risk allocation being allocated? Is it sitting with the project, or is it actually sitting with all the downstream subcontractors? And then the third one, which is absolutely the main focus there at the moment, is around connection. There's a huge problem around connection and build out at the moment, actually connecting to the grid. You can have this fantastic project, which is almost complete or complete, but still the actual regulator is not allowing it to connect because there's so many other projects trying to connect at the same time, and that can lead to instability in the national grid.
Great, awesome. And then from where you sit, is the energy transition inevitable, or are there still major structural obstacles?
It's a great question. It's the $1 million question. Look, I think we've got clear directional pathway. We all know where we are and where we need to get to. We've got all these net zero targets by 2050, and other states have got 2035, 2040, etc. But I don't think it's linear. And what I mean by that is that whilst we have the clear direction, the pathway is not clear. We have change of regulation all the time. We have change of government policy like we're seeing in the US that can be a real curveball for everybody. So much of it really will depend on the political environment and whether or not the capital flow continues to pour into the sector or not. And ultimately, that will be driven by the government.
And so, in your opinion, what has changed most in the past 5 years? Government policy, investor appetite, or the bankability of these assets?
Yeah, also a fantastic question. I would say, look, the biggest encouraging sign in the sector has been the sheer volume of projects coming to market. Now, when I say that, I don't mean projects that are actually converting into hitting financial close. A lot of these projects are all in that concept design stage and pre-construction. A lot of them can get right up to that point where they're ready to go, but then have problems around getting that final investment decision for a number of factors. I think, but the most exciting piece is the fact that we've now got institutional capital flowing in, as I mentioned. But when you have that, it's a sign that you have a mature sector, and it means that it's getting close to or is investment grade status. And really, that's just a byproduct of the volume of assets which are now in the market, which have been built. And those institutional investors coming in and saying, right, well, I can now actually buy a whole bundle of those, package them up into a portfolio, and then spin it out from a capital perspective.
Awesome. And are lenders and investors then, are they now fully comfortable with technologies like battery storage and hydrogen, or is there still hesitation in your opinion?
Yeah, so battery projects, I would argue now are mainstream.
Yep.
So that it was a very difficult asset class if you look back about 2 years ago, and that's because the banks are really, and to be fair, the investors and sponsors as well, were really struggling with how they could actually generate revenue and profit from these projects, because fundamentally batteries are based on an arbitrage model.
Mm-hmm.
So it's a merchant going up and down and basically bidding into the national energy market when you have your peaks and troughs. And the problem with that is from a bankability perspective, a lender needs to know they're going to get paid back. And whilst you can forecast, let's say 3-6 months ahead, these projects have an asset life of 20, 25 years. Lenders just couldn't see that far ahead. So how can they get comfortable? From a investor perspective, the issue is more around what that revenue offtake looked like. They couldn't access debt because they couldn't do a fully uncontracted, i.e. merchant project. So how could they actually get to a place where they had a capital stack that worked from both sides of the fence? What's been great is there's been a lot of innovative thinking in the market, and it's led to the development of a number of new innovative products. And you'll hear buzzwords thrown around, such as virtual offtake agreements, which Neoen and Acacia Energy introduced to the market, which has been a game changer. And off the back of those, we've had more different types of products introduced, which are actually more mainstream now. And right this second, almost every project you're looking at a form of capacity swap, which has often either a revenue underwrite or a revenue sharing arrangement. When you then combine that with the government policy at the moment, where we have all these CISs, so the capacity investment schemes, the LTESs as well, and now we've just seen in South Australia the firm processes, it just means we have a capital environment where there's a great combination of both government support and underwrite and market sector support from lenders and investors as well. And that's led to the battery space now being the main asset class in the renewable energy market. If you contrast that, however, to the other asset class being hydrogen, which sort of pretty much came around at the same time as batteries. Hydrogen had this global support, a huge investment flowing in from governments all over the world. But ultimately, whilst it's a great option, the underlying fundamentals aren't there yet. So conceptually it's great, but economically it's not viable. And what I mean by that is, basically, if you're an investor, you need the price that you can sell the hydrogen. At the moment, it sits around $9 per kilogram. Whilst that make it actually viable in the market for somebody who's going to buy that hydrogen from you, it needs to get the price of production, needs to push it down to about $3 to $4 per kilogram. It's a huge price differential there. And you hear a lot of people in the hydrogen, the e-fuels space talk about price parity with carbon mainstream fuels. And at the moment, there's that gap, and we need to get over that. It's the biggest hurdle at the moment. And to do that, really, again, it's about government support, like we've seen in the more traditional asset classes like wind and solar. And if the government can come in with the likes of what we're seeing now, the Head Start program, and really just be the catalyst for the industry, hopefully that will be enough to really stimulate momentum and then lead to more market-led projects.
Confidence, come back in. It's like everything, right?
Yeah.
So then, looking at from a global perspective in your career, particularly, like you've worked across Asia Pacific, Latin America, Africa, and Europe. So how does Australia compare in terms of ambition and execution, going through what you just spoke about there?
Yeah. Well, Australia is an extremely sophisticated market. There's no doubt about that. And if you also look at it from a perspective of its natural resources, critical minerals, land, sunshine, wind, it's got every composition you need to be a global power in the energy space. That said, I think the challenge that investors find in Australia is that it's really around that policy component. It's moving too quick. change of politically of views. We've seen that in certain states in Australia, which have now changed their roadmaps. And also is around that grid curtailment connection issue. You've got all these projects that want to connect to national grid and cannot. So it's about actually, you've got a lot of these projects are ready to go, but they actually can't get over the hurdle and get to financial close.
Must be so frustrating.
Yep.
So then, if you are international investors, in your opinion, and still bullish on Australia, or the regulatory or grid challenges, are they giving them a pause?
I think people are still piling into the Australian market. I think there are geopolitical factors there, obviously, for why that's happening. America has obviously pushed back on their renewable energy roadmap. And as a consequence, and also if you look at the IRS in terms of what the support the government was providing in the US to manufacturers of solar panels, wind turbines. So they've all now got to find different markets in which to sell into, and Australia is just an obvious market to do so. So there's plenty of international investment flooding into the market. It's just a matter of actually then finding the right quality assets. There's a lot of people trying to sell assets at that very early conceptual stage where they've just acquired the land and got development application approval, maybe environmental approval. But to then actually get that concept design to financial close, final investment decision again, is a very different prospect. And it's really about understanding that. And I don't think investors really do until they're in the market, particularly if they're new greenfield developers, they're not buying an existing portfolio. I think they get there here, then they realize, oh, well, this is going to take a lot more than we expected.
Yeah. I think in every walk of life, in any deal-making environment, there's always a hard reality of getting deals done, right? And so what's the biggest bottleneck today in getting a renewable energy project financed and built? Revenue
contract.
Yeah.
Yeah. Particularly right now, there's multiple projects which are ready to go.
Yeah.
And then the offtake's fallen away. So it really is around having that secure cash flow in place to service debt and also send out money back to equity. So you really just need to find that real credible off-taker, the likes of hyperscalers and big gentailers. But the actual availability of those off-takes is not as voluminous as we'd like it to be.
Have you seen projects that look perfect on paper but ultimately failed, and what usually derails them outside of revenue?
Yeah, so if you ignore the revenue piece that we've touched upon, then I think it's more around just misunderstanding of risk.
Yeah.
So we talked earlier about how Project Finance 101 is about risk allocation and pushing down to the appropriate parties to actually take on that risk. Something that, because with Project Finance, I always like to view it, when I talk to, for example, juniors and new members of the team, it's like a puzzle. And different types of finance out there, like leverage or corporate finance, private equity, everything has to work. If you have one piece missing, then the whole concept just it falls over. And I think there's so many different moving parts for these projects, it's easy to miss something. And that thing which may have seemed so insignificant at the time becomes a material risk factor for the project.
Awesome. I think your experience, obviously seeing things go really, really well, but also from the outset, and that's why people use somewhat your skill set to get through that risk and stay in front of it. In your opinion then, what does commercial acumen really mean in project finance, and how does it separate good lawyers from great ones?
Yeah, and also another great question. I think if I was going to explain this to a junior lawyer in my team, I think I would say, look, it's about understanding the underlying economics of a project. As a project finance lawyer, I would say the assumption is that you know how the project documents work and the appropriate risk allocation has been made. I think a good project finance lawyer, however, also understands the underlying economic drivers for the project, both from a bankability perspective, but really importantly from the sponsor's perspective, and knowing where to push and where not to push, and come out with really a bipartisan solution to ensure that the project itself isn't derailed during the documentation process by the lawyers themselves.
Great response. And then for young lawyers, you touched on, For young lawyers who want to work in the energy and infrastructure space, what skills or mindset do they need to develop early?
Yeah, look, from personal perspective, I think it's about having a passion, genuinely a passion for the area. And pleasingly, you actually see a lot of young engagement when they walk in the door with the law firms. It's all the stuff they're seeing in the press day to day, whether it's on the internet or on the TV. It's on all the headlines. So already it's an interesting area that they've got some idea about. And for me, it's about then digging deeper. So they understand, particularly Australia, it's a very, very complex regulatory framework, understanding what all of these concepts are, understanding the underlying architecture and infrastructure of the Australian energy market. And then once you've got that base understanding, then you can sort of then start to pulling all the other pieces and start to make it make sense, if you understand what I mean. And once you've got that genuine love and desire of the area, plus that real core basic knowledge, then I think everything just falls into place.
Like a good project finance deal.
Yeah.
And I think, for lawyers, even who I see in my network, when you've got a passion about something, whether it be finance, whether it be M&A, whether it be TMT, you should have a level of intellectual curiosity where, if you don't know the answer, but you have the right attitude to go and find the answer because you actually have an interest in the space, it really separates people who want to be good to get into to be great, because that's the difference.
Exactly. The word there, curiosity, it's essential. If you got the passion and you're curious and willing to put the time in and really get to understand the sector, then you're going to be a great project finance lawyer.
Awesome. And so looking ahead, we love predictions. Looking ahead 10 years, what technology or structural shift in energy do you think will surprise people most?
Oh, it's a great question because it's such a fluid area. If I was to really focus on what I saw 10 years ago and where we are today, again, then it was just everybody was talking about solar and there was a little bit of wind in the market. Batteries didn't exist. Hydrogen, e-fuels, pumped hydro, none of that was in the Australian market. And if you look at now, roll on where we are, we've even got new concepts arriving right this second, like heated as a service is a new concept. We've got air pressure batteries in mines. So we have no idea where the market will be in terms of an asset base in 10 years time. I think if my prediction would be in 10 years time, it will probably be a continuing consolidation of what we're seeing now, that people are moving away from that just simple single asset type of financing structure where they've only got solar or they've only got wind. I think what you'll see in 10 years time is a market which is evolved to the point where it is very large portfolios of assets held by large institutional investors, and those assets pools are a combination of firm renewables. So you're talking about batteries, hybrid storage projects, long duration. Because what we're really looking at is saying, well, coal is going to go, and then coal is going to go in the short term, and it's all some of it mandated and regulated by 2035. So that means we need to replace those coal assets with firm supply, i.e. 24-hour or close to 24-hour. So the big push we're seeing at the moment with batteries will continue, but what we are seeing now is that people are now trying to bring in long duration batteries. So it doesn't just cover 1 hour or 2 hour, it covers 4 hour, covers 8 hour, it covers 12 hours. And that's essential if we're going to actually have a stable grid that can actually basically fill the gap that coal is going to leave.
Awesome response. And then if you look at 2035, then what would success look like for the energy sector?
A more firmed green sector that is able to withstand stress and provides grid stability in the absence of coal generators.
Great. With everything that's going on around the world, it's even looking back 10 years to where we are now, it's frightening, but also very exciting in the space of where we're going to be in 10 years. And I think, to your point, it's just every headline has got a renewables transaction on it, or people all are curious about it because it is in your face. So it's an exciting time, certainly, to be project finance lawyer in the renewable space. Moving on now to some quick fire questions.
Right. Okay.
Solar, wind, or storage? Where is the biggest long-term opportunity?
Storage.
Most misunderstood part of project finance?
Risk allocation. People that go in believe it's about eliminating risk. It's not about eliminating risk. It's about appropriately allocating risk to the right parties within the transaction.
It's a good journey through life.
Yeah, that's right.
One word to describe the future of energy investment?
Inevitable.
Boom.